Japanese finance officials kept to their word to continue to intervene in the currency markets to halt steep rises in the yen by acting for the fourth time in just over a year on Monday. The move came after the yen rose to a post-World War II high against the dollar of 75.31. The Japanese government reacted with the latest round of foreign exchange intervention. It is expected this took the form of selling yen to buy dollars, which will then be invested in US Treasuries. This would match the pattern of recent interventions since September 2010. Whilst the Prime Minister and Finance Minister confirmed the action just minutes after it had begun, they did not specify a specific figure on the amount of money involved. However, there is speculation throughout trading on Monday as much as 5 to 6 trillion yen will be sold by authorities, which would represent a record one-day intervention. Sumino Kamai is a senior analyst at the Bank of Tokyo Mitsubishi UFJ. The sharp, large jump in the dollar-yen would suggest that this was a very large amount. After the BOJ did not intervene last week, the yen had risen again against the dollar, as there was speculation the Japanese were not as willing to sell their currency as they had been previously. Yet another record was set as the dollar fell to 75.31 early in Asian trading hours. But the Japanese action on Monday was evident, as the dollar then rose by as much as 5% to 79.55. However, many people do not believe the action will work in the mid to long term to hold these levels or reverse the trend of the currency strengthening. The move is designed to help the Japanese economy and exporters in particular, who have struggled to cope with the strength of the yen. The Japanese finance minister spoke to reporters 20 minutes after the intervention had begun mid-morning. "I have said time and again that we will take decisive steps against speculative movement in the market, but unfortunately we have seen the continuance of one-sided speculative movement that doesn't reflect our country's real economy at all." The timing of the move on the last day of the month is not coincidental. Exporters are now able to repatriate their earnings or bring yen back to the country from sales made abroad and more attractive currency rates before their books close for October. Exporters had already been suffering from the effects of the devastating earthquake and tsunami which hit the country in March. Initial reactions from Japanese companies have been largely positive, but many have referred to the popular belief that the action may prevent speculators but will not work to reverse the trend. A representative from Nippon said they would prefer levels of 85 to 90 yen against the dollar, and Hiroki Yoshimatsu, executive officer at Mitsubishi, said, "We welcome the intervention very much. It's unclear how long the current level will last." The pessimism surrounding the long-term impacts of today's action follows the last similar unilateral action by Japan in August, when the yen quickly returned to pre-intervention levels, followed by new lows. The move won't help the efforts to persuade China to allow their currency to appreciate, and this issue is expected to be raised when the G20 meet this week. The press view will return on Wednesday, but as always, stay tuned to Dukascopy TV. Goodbye.